Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 10, Unit 2. Let us begin. We'll begin with forfeiture of shares. Share forfeiture. The term forfeit actually means asking taking away of property on breach of a condition. It is very common that one or more shareholder fail to pay their allotment or call money on due dates. Failure to pay call money results on forfeiture of shares. Forfeiture of shares is the action taken by the company to cancel the shares. The directors are usually empowered by the Articles of Association to forfeit those shares by serving proper notice to the defaulting shareholders. When shares are forfeited, the title of such shareholder is extinguished, but the amount paid to date is not refunded to him. The shareholders then has no further claim on the company. The power of forfeiture must be exercised strictly, having regard to the rules and regulations provided in the Articles of Association, and it should be bona fide in the interest of the company. The articles of the company usually authorize the directors to forfeit shares of the members on account of non-payment of call or interest thereon after serving him a prior notice as prescribed by the Articles of Association. Directors also have the right to cancel such forfeited share before the forfeited shares are re-allotted. Accounting entries. At the time of passing entry for forfeiture of share, student must be careful about the following matters. Amount called up, that is, amount credited to capital in respect of forfeited shares, amount already received in respect of those shares, amount due but has not been received in respect of those shares. We know that shares can be issued at par, at a premium, at par or at a premium. Accounting entries for forfeiture will vary according to the situation. Let's learn the accounting treatment of forfeiture of a share issued at par. In this case, share capital account will be debited with the called up value of shares forfeited. Allotment or calls account will be credited with the amount due but not paid by the shareholders. Alternatively, calls in arrear calls can be credited for all amounts due if it was transferred to calls in arrear account. Forfeited shares account or share forfeiture account will be credited with the amount already received in respect of those shares. Share capital account debit, number of shares multiplied by called up value of per share. To forfeited share account, amount already received. To share allotment account, amount due but not paid. Share first call, amount due but not paid. Share final call, amount due but not paid. Where all amounts due on allotment, first call and final call have been transferred to calls in arrears account, the entry will be share capital account debit, number of shares multiplied by called up value per share, to calls in arrear account, total amount due but not paid, to forfeited shares account, amount received. Do it once more. Where all amounts due on allotment, first and final call have been transferred to calls in arrear account, the entry will be share capital account debit to calls in arrear to forfeited shares account. Illustration 9. A Limited forfeit 30,000 equity shares of 10 each called up held by Mr. X for non-payment of final call of rupee 4 each. However, he paid application money 2 per share, allotment money 4 per share, that is 6 per share, on 4 rupees he has not paid. These shares were originally issued at par. Give journal entries for the forfeiture. Solution. Solution. Equity share capital. Equity share capital account debit 30,000 shares of 10 each called up amount, 30,000 shares of 10 each, that is called up amount 3 lakhs, to equity share final call, to equity share final call account on 30,000 shares. The final call was 4 that he had not paid, 1,20,000, to share forfeiture. Forfeited shares 30,000 multiplied by 6, 1,80,000. 1,80,000 being the forfeiture of 30,000 shares of rupee 10 each fully called up for non-payment, of final call money at the rate rupee 4 each. That's it. I believe you must have understood till here. Let us move ahead. Illustration 10. X Limited forfeited 20,000 shares of 10 each, 8 called up, for non-payment of first call, money, that is 2 per each, application money 2 per share, allotment money 4 per share have already been received by the company. Give journal entries for the forfeiture. Assume that all money due is transferred to calls in arrears account. Okay. So we specifically no need to open an account known as first call money. So we'll open calls in arrear account. Solution. Equity share capital. Equity share capital account debit called up amount 20,000 shares 8 rupees multiplied by 8, 1,60,000, to calls in arrears. On 20,000 rupees, 2 on 20,000 shares rupee 2, that is 40,000. This we have not received. Calls in arrears to forfeited share 20,000 multiplied by 6, 1,20,000. I believe you understood. Being the forfeiture of 20,000 equity share, equity shares of 10 each, 8 called up, 8 called up for non-payment of first call money at the rate rupee 2 each. I believe you understood. Let us move ahead. Forfeiture of share which were issued at a premium. In this case, share capital account will be debited with the called up value of share forfeited. If the premium on such share has not been paid by the shareholder, the securities premium account will be debited to cancel it if it was credited earlier. Allotment, calls, and forfeited accounts will be credited to the usual manner. If the premium has already been received by the company, it cannot be cancelled even if the shares are forfeited in the future. If premium not received, share capital account debit called up value, securities premium account debit amounts of security premium not received, to share allotment account if amounts due but not paid, share first call account due but not paid, final call account due but not paid, to forfeited shares account, amount received on forfeited shares. If the amount of premium is received already, in this case, share capital account debit called up value to share allotment account if amount due but not paid, to first call account due but not paid, final call account due but not paid, forfeited shares account amount received on forfeited shares. I believe you understood. Illustration 11. X Limited forfeited 5,000 shares of 100 each fully called up, which were issued at a premium of 20%. 5,000 shares of 100 each fully called up, which were issued at a premium of 20%. Amount payable on shares were on application 20, on allotment 50, that is including premium. So it is 30 plus 20. On first and final call, it is 50. Only application money was paid by the shareholders in respect of these shares. Only application money paid by the shareholders in these shares. Past journal entries for the forfeiture. Solution. Equity share capital. Equity share capital debit 5,000 equity shares multiplied by 100 called up, so 5 lakhs. 5 lakhs. Share premium account debit. Share premium account debit. The premium is 20. The premium is 20. 5,000 multiplied by 20. 1 lakh. Over here you should understand one thing, that this 5,000 multiplied by 20, the share premium or securities premium, the company has not received, so we need to cancel it, and that is why we are debiting it over here, because we need to credit securities premium account when we'll pass the allotment entry. 2 equity share allotment. Equity share allotment 5,000 multiplied by 50. that is 2,50,000 to equity share first and final call to equity share first and final call 5,000 multiplied by 50, that is 2,50,000 to forfeited share to forfeited shares 5,000 multiplied by 20, that is 1 lakh. Being the forfeiture of 5,000 equity shares of ₹100 each, fully called up, issued at a premium of 20% for non-payment of allotment and call money. Non-payment of allotment and call money. I believe you understood. Write a note over here. Share premium at ₹20 on 5,000 shares has not been received by the company, therefore at the time of forfeiture securities premium account will be debited to cancel it because securities premium account was credited at the time of allotment. I believe you understood. Let us move ahead. Illustration 12. Mr. Shami has applied on 1,000 shares of the company XYZ Limited, paying application money ₹2 per share, but has been allotted only 600 share out of 1,000 share. The share have been face value of 10 rupee and a premium on ₹2 per share, which are payable on allotment 5 including premium, that means 3 plus 2, and final call 5. Now, in case of Shami doesn't pay allotment money, the final call and his shares are forfeited. The following entry will be passed for forfeiture. Share capital account debit 600 multiplied by 10, that is 6,000. Securities premium, debit, 600 multiplied by 2, 1200. 2. Share forfeiture. 2. Share forfeiture account. 2,000 that we have already received. 2,000. 2. Share allotment. 2. Share allotment. 2,200. 2. Share final call. 2. Share final call. 600 multiplied by 5, 3,000. 600 multiplied by 5, 3,000. Write a note over here. Total amount received. Total amount received on application, 1,000 multiplied by 2, 2,000, less amount used for application money. Amount used for application money, 600 multiplied by 2, that is 1,200. Excess money received. Excess money received on application, 800. Excess money received on application, 800. Amount due on allotment, 600 into 5, that is 3,000. For premium, 600 into 2, that is 1,200. For capital, 600 into 3, that is 1,800. Thus, amount not received on allotment, amount not received on allotment is excess, that is 800, minus, so 3,000 minus 800, that is 2,200. For premium, it is 600 into 2, that is 1,200. For capital, it is 1,000. Next topic, share forfeiture of fully paid up shares. Forfeiture for non-payment of calls, premiums, or unpaid portion of the face value of share is one of the many causes for which share may be forfeited, but fully paid up shares may be forfeited for realization of debts of the shareholder if the articles specifically provide it. Reissue of forfeited shares. A forfeited share is merely a share available to the company for sale and remains vested in the company for that purpose only. Reissue of forfeited share is not allotment of shares but only a sale. The share after forfeiture in the hands of the company is subject to an obligation to dispose it of. In practice, forfeited shares are disposed of by auction. These shares can be reissued at a price so long as the total amount received from the original allottee to the second purchaser for those shares is not less than the amount of arrears on those shares. Accounting entries. Bank account will be debited actual amount received. Forfeited shares account loss on reissue to share capital account. Next, forfeited shares account to capital reserve account. In connection with reissue, the following points are important. Loss on reissue should not exceed the forfeited amount. Loss on reissue should not exceed the forfeited amount. If the loss on reissue is less than the amount forfeited, the surplus should be transferred to capital reserve. The forfeited amount on shares, amount originally paid up not yet reissued, should be shown under the heading Share Capital. When only a portion of the forfeited shares are reissued, then the profit made on reissue of such portion of shares only must be transferred to capital reserve. When the shares are reissued at a loss, such loss is debited to forfeited shares account. If the shares are reissued at a price which is more than the face value of the share, the excess amount will be credited to securities premium account. Do it once more. If the shares are reissued at a price which is more than the face value of the share, the excess amount will be credited to securities premium account. If the reissue amount of forfeited amount, if the reissued amount and forfeited amount together exceeds the face value of the share reissued, it is not necessary to transfer such amount to securities premium account. I believe you understood till here. Let us continue. Calculation of profit on reissue of forfeited share. Students will appreciate that the credit balance of forfeited share account cannot be considered a surplus until the share forfeited have been reissued, because the company may on reissue allow the discount to the new purchaser equivalent to the amount held in credit in this regard to forfeited shares account. Suppose 120 shares of a nominal value of 10 have been forfeited, upon which rupee 5 per share was paid up and transferred to forfeited share account. Afterwards, 50 shares are reissued at rupee 6, being collected to make them fully paid up. 50 shares multiplied by 10 minus 50 shares multiplied by 6, that is 200. Out of shares forfeited will be credited to share capital account to make up the deficiency on reissued capital, and 50 shares multiplied by 5, that is 250 minus 200, that is 50, will be transferred to capital reserve account, being the surplus on reissue of 50 shares. It would have in the forfeited share account balance equivalent to the amount collected on remaining 70 forfeited shares, that is 350, which will be carried forward till these shares are reissued. In the above case, it has been assumed that the amount paid up on all 120 forfeited share was rupee 5 per share, but in practice, shares may be forfeited on which varying amount are outstanding. For instance, if in the above case 70 shares were forfeited with rupee 5 paid up thereon and 50 shares with 7.5 was paid up thereon, then share forfeited account balance would be 70 into 5 plus 50 multiplied by 7.5, that is 725. Thus, If 50 shares with 7.5 paid up are reissued for 6 per share, then capital reserve balance will be as follows: 7.5 plus 6 minus 10 face value multiplied by 50 share, 175. I believe you understood. Illustration 13. Mr. Long, who was the holder of 2000 preference share of 100 each, on which 75 per share has been fully called up, could not pay his due on allotment on first call each at 25 per share. The directors forfeited the above share and reissued 1500 of such share to Mr. Short at 65 per share, paid up as 75 per share. Give journal entries to record the above forfeiture and reissue in the books of the company. Solution. Preference share capital account debit. Preference share capital debit. 1500 share, 2000 share, on which 75 per share has been called up. So 1,50,000 to preference share allotment, to preference share allotment, $2,000 multiplied by 25, 50,000, to share first call, to share first call, 2000 multiplied by 25, that is 50,000, to forfeited share, forfeited shares, that is 50,000, being the forfeiture of 2000 preference share, 2000 preference shares of rupee 75 each being called up for non-payment of allotment and first call money. That's it. Next entry, bank account debit, on 1500 they paid 65, so 97,500, forfeited shares debit, that is 1500 multiplied by 10, 15,000, to preference share capital, 1,12,500, 1,12,500 being reissue of 1500 shares at 65 per share, per share paid up as 75 as 75. At last, forfeited shares account debit to capital reserve to capital reserve. We need to find out the amount. Working note calculation of amount to be transferred to capital reserve forfeited amount per share amount is 50,000, share is 2,000, so per share it is rupee 25. Loss on reissue 75 minus 65 because it issued at 65, 10 rupee is the loss. Surplus per share reissued, surplus is 15, and at last transferred to capital reserve. This 15 is transferred to capital reserve on 1500 share, 15 rupees, that is 22,500. Put it in the journal entry, 22,500. I believe you understood. This. Let us move ahead. Issue of shares for consideration other than cash. Public limited companies generally issue their shares for cash and use such cash to buy various types of assets needed in the business. Sometimes, however, a company may issue shares in a direct exchange for land, building, or other assets. Shares may also be issued in payment for services rendered by the promoters, lawyers in the formation of the company. These shares should be shown separately under the heading share capital. Within specified time of allotment, the company must produce before the registrar a written contract of sale of service in respect of which shares have been allotted. Accounting entries. When assets are purchased in exchange of shares, asset account will be debited to share capital account. I believe you understood. This. Let us move ahead. Illustration 14. X Company Limited was incorporated with an authorized share capital of 90,000 equity shares of 10 each. The company purchased land and building from Y Company Limited for 4 lakh payable in fully paid up shares of the company. The balance of the shares were issued to the public, which were fully subscribed and paid for. Do it once more. X Company Limited was incorporated with an authorized share capital of 90,000 equity shares of 10 each. The company purchased land and building from Y Company Limited for rupee 4 lakh, payable in fully paid up share capital of the company. The balance of the shares were issued to the public, which were fully subscribed and paid for. You are required to pass journal entries and prepare the balance sheet. Let us begin. Solution. Journal entries. So journal, first entry, land and buildings account debit 4 lakh to Y Company Limited account 4 lakh, being the land and building purchased from Y Company Limited. Next entry, Y Company Limited account debited 4 lakh to equity share capital to equity share capital 4 lakh, being 40,000 shares of rupee 10 each issued at Y Company Limited on purchase of land and building. Purchase of land and building. Next entry, bank account debited to equity share application and allotment 5 lakhs, because remaining is 5 lakhs, being the issue of 50,000 shares of rupee 10 each, Next, equity share application and allotment account 5 lakhs to equity share capital 5 lakhs, being share allotted for application money received, So this was the journal entries. Now we'll make the balance sheet in relation to it. Balance sheet. Balance sheet of X Company Limited. Particulars amount. First entry is equity and liabilities equity and liabilities. Under this heading, shareholders fund, shareholders fund, share capital will be 9 lakhs, 4 lakh issued to the general public, and for 5 lakh land and building. 9 lakhs total. Assets, non-current assets, fixed assets, tangible. Under this, tangible assets, 4 lakhs, current assets, cash and cash equivalent, 5 lakhs, total 9 lakhs, total 9 lakhs. I believe you understood till here. Let us see what we have learnt in today's class. Let us quickly see what we have learnt in today's class. We started with forfeiture of shares, understood the concepts of share forfeiture, when the share is issued at par or at a premium, how to journalize the same, how to pass journal entry in case of forfeiture of a share. We done several illustrations in relation to it. Then we shifted to reissue of forfeited shares. To the concepts of reissue of forfeited shares, how the accounting treatment of done in case of a reissue of forfeited shares, how to calculate the amount transferred to general reserve. We done the illustrations in relation to it, and at last we have learned today issue of shares for consideration other than cash. How to do the accounting treatment of issue of shares for consideration other than cash. We have done illustration 14, where illustration 14, in this illustration we have learned that 90,000 shares were issued at 10 rupees. For land and building, 4 lakh is payable and 5 lakh issued to the general public. We have done the accounting for the same, and at last we prepared the balance sheet. I believe you understood. We are stopping here. Thank you.